NIO stock wrapped up Friday's trading session essentially flat, shedding just 2 cents in the aftermarket to finish at $7.70 per share. At first glance, that may seem like an uneventful way to close the week. But beneath the surface, there are forces at work that could make this weekend an ideal moment to take stock of where NIO stands. Strong delivery numbers from Chinese electric vehicle makers, new regulatory signals out of Beijing, and shifting dynamics in Europe are reshaping the backdrop in which NIO trades. This weekend update will look at how NIO performed over the past week, what the company's fundamentals are telling us, how regulatory and competitive developments are shaping the outlook, and why the story remains constructive even in the face of short-term pullbacks. Throughout the past several weeks, NIO has been engaged in a tug-of-war between buyers and sellers. Each time the stock approaches the upper sevens, particularly the $7.80 to $8 zone, profit-taking and short-selling tend to emerge. Each time it dips towards $7, buying interest reappears. This kind of range trading can be frustrating for traders looking for a clean breakout, but it often represents healthy consolidation after a period of volatility. Friday's flat close at $7.70 fits that pattern perfectly. It tells us that the market is still digesting gains from earlier in the week, but buyers continue to defend the $7 floor. The week also brought some powerful signals from the broader electric vehicle sector. Tesla, the industry leader, reported record quarterly deliveries of 497,000 vehicles worldwide, up more than 7% from a year earlier and exceeding many forecasts. Much of that surge was driven by U.S. buyers taking advantage of federal tax credits before they expire, but even after adjusting for that, the performance was strong. This matters for NIO because Tesla's results both validate the demand story for electric vehicles and raise the bar for what investors expect from competitors. When Tesla beats expectations, it can attract fresh capital into the EV theme, lifting sentiment for the sector. It can also sharpen comparisons that make investors more selective about where they place their bets. For a premium Chinese EV maker like NIO, the takeaway is to focus on differentiation, quality, service, battery swapping, and a deliberate approach to overseas markets, rather than trying to match Tesla on sheer volume. Another important development is China's new export permit policy for electric vehicles, which will take effect in 2026. Under the new rules, automakers will need government permits to export cars, with a stated aim of safeguarding the image of Chinese brands overseas by ensuring quality and compliance. Initially, the announcement created concern about more bureaucracy for companies like NIO. On reflection, it could be a net positive for premium players. NIO has invested heavily in its brand, its battery swap infrastructure, and its sub-brands Onvo and Firefly. In a world where only authorized, high-quality producers can export, those investments become a moat rather than just a cost center. Fewer low-end competitors undercutting prices in Europe or other markets would strengthen NIO's positioning and protect its margins. This is a subtle but important shift in the narrative about NIO's long-term overseas growth prospects. While NIO's stock price has been consolidating, its operational performance has been improving. The company delivered 34,749 vehicles in September, hitting a new monthly record. In the third quarter, it delivered 87,071 vehicles, up more than 40% year over year. Those numbers show that demand remains robust despite macro headwinds. They also give analysts confidence to raise their price targets. UBS recently boosted its target to $8.50, citing both the strong delivery trend and the potential for near-term upside if sentiment improves. These fundamentals act as a foundation under the stock even when short-term trading is choppy. Technical factors also play a role. Short interest in NIO remains significant at around 9% of the float. That means that if the stock can finally break above $8 with conviction, a wave of short covering could amplify the move. Until then, the range persists. Support at $7 continues to attract buyers. Resistance in the upper sevens continues to attract sellers. Friday's flat aftermarket session is just the latest skirmish in this ongoing battle. Another dimension to watch is NIO's European expansion. The company plans to enter 7 additional European markets over the next 2 years, using distribution partnerships to build brand awareness and service capacity. That expansion is both an opportunity and a challenge. On the one hand, it gives NIO access to affluent consumers in markets where premium EVs are gaining share. On the other hand, it requires heavy investment in infrastructure, sales, and service networks at a time when trade tensions and tariffs are rising. Reports of delays or scaled-back investment in battery swap stations in Europe show how difficult execution can be. The new export permit regime could also affect how quickly NIO can roll out its sub-brands abroad. But the strategic direction is clear. NIO wants to be a global premium EV brand, not just a domestic player. Against that backdrop, Friday's modest decline after hours looks less like a sign of weakness and more like a pause in a constructive setup. The stock has been making higher lows. It has held the $7 floor. It has repeatedly pressed resistance in the upper sevens. The company is delivering record numbers, building a brand moat, and preparing for overseas expansion under a new regulatory regime that may favor quality producers. The sector leader has just reported record deliveries, validating the demand story. The stage is being set for a potential breakout when the technical picture aligns with the fundamentals. This weekend's message to investors is to focus less on the 2-cent dip and more on the structural trends shaping NIO's outlook. The short-term price action is noise. The real story is a company that is executing on its growth plans while the environment around it is evolving in ways that may ultimately strengthen its competitive position. That's why the tone of this update is measured but optimistic. There are risks, price wars, regulatory uncertainty, execution challenges, but there are also clear catalysts for long-term value creation. Looking ahead to next week, key things to watch include any guidance or commentary from Chinese regulators about how the export permit system will be implemented, new registration or delivery data from NIO and its peers, and further analyst coverage or upgrades as the company continues to hit its operational milestones. Also, watch the technical levels. A decisive move above $8 with strong volume could trigger short covering and momentum buying. A drop back towards 7 without news would indicate more consolidation is needed. Either way, the levels are clear and the fundamentals are improving. The best way to frame this weekend video is as a strategic outlook piece rather than a simple recap. Explain that NIO ended the week at 770, essentially flat in the aftermarket, but that beneath the surface the company is posting record deliveries, preparing for a new regulatory regime that could favor quality exporters and expanding into Europe. Highlight Tesla's record deliveries as a sector validation and a reminder of the competitive bar. Then walk through what to watch next week in terms of catalysts and price action. The goal is to give viewers a framework they can use to interpret NIO's moves rather than just reporting the latest tick. By taking this approach, you turn a flat aftermarket session into an opportunity to educate and engage your audience about the deeper forces shaping NIO's trajectory. You show them that even on quiet days important things are happening that could influence the stock's next big move. And you keep the narrative measured but optimistic, acknowledging risks while highlighting the company's strengths and the catalysts that could unlock value. NIO's stock may not have ended the week with fireworks, but its story is far from static. With support holding, fundamentals improving, and regulatory and competitive dynamics shifting in its favor, the company remains one of the more compelling plays in the Chinese EV space. This weekend is a good time to step back, look at the bigger picture, and prepare for what could be coming next.